This is not financial advice. I'm recording my thoughts about SoFi stock. The stock is currently trading at about $8.38 with a market cap of about $8 billion. In this video, I'm going to cover SoFi's valuation in 2027. As usual, I provide two different cases, one with reasonable assumptions and the other one with great execution. In full disclosure, I do own more than 500 shares of SoFi at an average cost of about $6. I bought this stock as a high risk, high reward stock. In other words, I do recognize the high risk that SoFi has because they deal with personal loans and student loans, both of which are unsecured loans. And if there are significant delinquencies, this company can go bankrupt. That is the reason why I also put $0 as a possible case. Before we move on to the valuation, let's look at how the individual revenue segments of SoFi are performing. As we all know, SoFi has three different revenue segments: lending, financial services, and technology platform. As you can see on the screen, I'm showing the segment financials and I've highlighted lending. This screenshot shows the performance in the past 2 years from March 2021 to March 2023. As you can see on the screen, in the past 2 years, SoFi more than doubled its revenue from the lending segments from $147 million to $337 million. That's an average annual growth of about 50% year on year. So remember that. Now let's move on to the technology platform, which consists of Galileo and Technisys. As you can see on the screen, in the past 2 years, the revenue increased from $46 million to about $77 million. In other words, SoFi could only do 1.6x their revenue in the past 2 years. That's an average annual growth rate of under 30%, which is not very impressive because SoFi bought these Technisys and Galileo for about $2 billion together, and they diluted the shareholders, us, by about 160 million outstanding shares. So this seems like an overhang to me at this moment, but we have to see how this is going to do in the coming years. Maybe this will contribute significantly to the revenue and the margins, but at the moment, it doesn't seem like it. It seems like an overhang. Now let's move on to the financial services, in which SoFi has shown significant improvement. They did a 13x in revenue in the financial services within 2 years. SoFi had only $6 million of revenue 2 years ago, and now they have about $81 million of revenue per quarter, which is very impressive. So remember that financial services is growing very rapidly. Now let me show you the case with reasonable assumptions. As you can see on the screen, I have done the valuation for each revenue segment separately because each of them are very different businesses from each other, and they also command different multiples. They are growing at a different pace and they have different profit margins. So that's why it makes sense for me to do the valuation by revenue segment. And who knows, maybe SoFi can spin off some of these revenue segments into a separate company to increase value. But we have to see how that's going to pan out in future. As you can see on the screen, in 2023, SoFi is guiding for about $2 billion of revenue. Last year, they did about $1.5 billion. So this year, 2023, they're saying they can get to $2 billion. And looking at their growth trajectory, I can see they can make about $1.3 billion from lending, $0.3 billion from financial services, and the rest of the $0.3 billion from the technology platform like Technisys and Galileo. In the past 2 years, lending grew by about 50%, but as you know, as the business gets bigger and bigger, it's hard to grow. So in the reasonable assumptions case, I'm assuming 30% growth rate year on year for the next 5 years. That's going to result in $3.7 billion of revenue for lending segment. And financial services did grow rapid, but that growth was from 6 million to about 80 million. But since they got bigger now, it's hard to grow. So I'm assuming 30%, which I think is reasonable. With that, they can make about $1 billion of revenue in financial services in 2027. Technology platform was growing at under 30% growth rate, and they're also losing customers. There's a news that they're gaining a big bank, but until that news comes out, I cannot assume anything optimistic about technology. That's why I'm assuming 15% growth, with which they can make about $600 million of revenue in 2027. When I put these three things together, the total revenue for 2027 would be about $5.2 billion. from $2 billion this year to $5.2 billion in 2027. That is impressive growth. With respect to net profit margins, I've assumed 25% net profit margin for lending, which is on par with Bank of America. And financial services, I'm only assuming 15% because there is tremendous competition and the take rates are much lower in financial services. And if you think more than 50% is fair, you can assume that, but for me 15% seems reasonable, which is why I assumed 15%. And for the technology platform, it's typically a high margin business, so I'm assuming 25%. With that, the net income is about $1 billion in 2027 for lending segment, about $13 million for the financial services and $14 million for the technology platform. So overall, they can make about $1.2 billion of net profit in 2027, which I think is reasonable, maybe a little optimistic actually. With respect to multiple, as you can see on the screen, for lending, I put 13 multiple. Typically, banks get 10 multiple. You can see the example of US Bank. It makes $5 billion of net income, but its market cap is only $50 billion. So it's getting a multiple of 10. Same goes with JP Morgan and also Bank of America. But I'm giving SoFi a premium multiple of 13. And if you want to know more about why banks get a multiple of 10, I'm going to link Bank of America's valuation video that I did a while ago. And I will pin it in the comments so you can watch. For financial services and technology, I'm going to assign 25 each multiple based on their growth rate and profit margin. With that, this company would be worth about $18 billion market cap in 2027. Out of that, 12 billion correspond to the lending segment, 3 billion correspond to the financial services, and 3 billion correspond to the technology platform. With respect to number of outstanding shares, they currently have about 941 million outstanding shares, and I'm assuming 4% dilution in the coming years because SoFi is not profitable yet, and even if they get to profitability this year, it's going to be minute, maybe single digit. It's good for them to raise some cash to keep it on the balance sheet because even in 2024, the interest rates are going to stay high. Even in 2025, the Fed was saying median interest rate of over 3%. So I think 4% dilution is reasonable and SoFi should raise some cash. With that, SoFi will have 1.145 billion outstanding shares in 2027. When I divide the 18 billion market cap with 1.145 billion outstanding shares, I get a stock price of $16. Currently, they are at $8.3, right? So that's about 98% gain in 5 years, which is a 2x opportunity. And this is with reasonable assumptions. For my personal journey, I rely on the case with reasonable assumptions. So since I bought the stock at about $6, if it reaches $16 in 2027, I kind of tripled my money, right? So I would be happy with that return. Now let's move on to the great execution case. In the great execution case, I'm assuming 40% growth in lending, 40% in financial services, and technology platform, even though it's growing much slower now, I'm assuming that they are going to win huge clients and accelerate their revenue by 35% year on year revenue growth rate. With that, they can make about $5 billion of revenue in 2027 for lending, 1.15 billion for financial services, and about $1 billion of revenue for technology platform. So that makes SoFi have $7.2 billion of total revenue in 2027, from $2 billion this year to about $7.2 billion in 2027. That's almost quadrupling their revenue, right? So that's why this is a great execution case. I think it's very hard to achieve, but it's definitely possible for SoFi with great execution. With respect to net profit margins, I'm assuming 25% for all segments. If you recall, in the reasonable assumptions case, I assumed only 15% for financial services, but in this case, I'm assuming 25%. With that, they will have about $1.8 billion of net income in 2027, all segments combined. With respect to multiple, I'm keeping the 13 multiple for lending, but for financial services and technology, since they're growing faster and have better net profit margin in the great execution case, they deserve a better multiple. So I'm assuming 33 multiple for both financial services and technology. With that, the market cap would be about $35 billion in 2027. Currently, they have $8 billion of market cap. So $35 billion of market cap in 2027 would be a 4x. That's very impressive. And with respect to the number of outstanding shares, they currently have about 941 million outstanding shares, and I'm assuming that they're not going to dilute the shareholders. Even if they dilute us in the short term, with the profits that they generate, they're going to buy back those shares. That's my assumption, because this is a great execution case. When I divide the $35 billion of market cap with 941 million outstanding shares, I get a stock price of about $36 in 2027. Currently they're at $8, right? So that's about 338% gain, or more than 4x in 5 years. This 4x plus gain gives SoFi a multi-bagger status for buyers who bought this stock under $6. In summary, in the reasonable assumptions case, I am getting about $16 stock price in 2027 for SoFi. And in the case with great execution, I'm getting $36, both of which are great returns. Personally, I will go with the return with reasonable assumptions. Since I bought this stock at about $6, $16 in 2027 will make me very happy. Let me know your thoughts in the comments. Thank you so much for watching.